Buy the dip is a phrase you've heard during every single sell-off for the last decade, and it's been consistently one of the most reliable calls, but only if you were in the right market. And right now, we are in such a right market, and nowhere is it being tested harder than in the semiconductor industry. So should you buy the dip? Well, by the end of this video, you'll know exactly how to protect yourself from what could be the largest trap of modern markets, showcasing the exact path I see as the most likely, the most probable to play out, and will map the critical levels for 5 different stocks so you know where the real opportunity sits. And let's start with a little bit of history to understand the risk of getting this wrong. During 2021, we were still rallying through a massive bull run for the software industry, the software as a service industry. And no one knew at the time that the peak had formed, right? This was 2021. A correction started, people started buying the dip. Here, it extended lower. They bought here, it extended lower. They bought here, it extended lower. And some of these stocks have indeed recovered. They did manage to see new all-time highs, a couple of them, Salesforce and ServiceNow come to mind. But many of them, even today, are still trading below the bottom of the initial dip. Many of them had never managed to form the new all-time highs, forming a top within this region instead, and seeing further declines afterwards. So how do you know this isn't the same dip software investors bought just wearing a semiconductor label? Well, software had already matured, it was in the very late stages of its uptrend. It did have a potentially complete pattern even across extending trends, but many of them had just built their first 5 waves up within the impulse, Atlassian comes to mind, Workday has had a similar result, and the correction was due. It got to a point where it was almost inevitable. And there were very early signs that such a correction would see even further extensions, where again, 4 years later, some of them are even below the initial dip, right? It had bottomed within the first move down, it recovered, it pushed much lower, and some of them have not even managed to recover to that initial dip level. So how do you know that this isn't the same thing happening all over again? Well, you cannot, but we do have a good indication that in the semiconductors industry, we are still very much through the midpoint of such a pattern. Right now, if I were to draw the large time frame structure of the semiconductors, I believe we would be somewhere in this area right now. Not even close to a top of the large wave tree, the strongest move yet. I believe we are still quite far from maturity, but this doesn't mean that within this structure, we will see a straight line up. This doesn't mean that we will not see internal corrections, because if I were to draw on a smaller time frame, the same path, or even an internal structure within it for that matter, I would still expect corrections to happen. I would still expect significant dips to occur that could take even 1 or 2 years to materialize. And that is exactly what we will be looking at today. We will take a look at the whole sector because the whole sector is seeing the dip. We will take a look at SOX, as it is the one that is best covering the stocks that I want to share here today, and that is Micron, SanDisk, Intel, ARM, and AMD. Now, this being a sector-wide dip, a sector-wide decline, is actually a good sign. We do not want to see individual companies seeing strong declines. This would be rather a sign of the business failing than a normal sector rotation in a healthy market that could still see extensions. And we could attribute this decline to a few key reasons. Firstly, we could be looking at Meta announcing that they're opening up its own AI computing capacity to other companies. And this, of course, triggered investors to question whether the chip demand would keep growing as fast as everyone assumed. We will touch a bit on that in a moment on the next slide as well. Then there is the China competition. CXMT is the name of the competitor that just had its IPO a couple of days ago. This is in the memory industry, so more of a competitor to the likes of Micron, SanDisk, and so on. But the idea is competition is intensifying. Then of course we could mention oil prices rising, reigniting inflation fears that could keep rates higher for longer. And I'm not even convinced that we had seen the full effects of oil prices rising prior to the conflict reopening. Then lastly, we could attribute this to profit taking, right? No surprise, this is the entire point of investing, this is the entire point of institutions putting their money into these stocks. It's to make money, and you cannot do that without taking profits. Then we have a theory worth raising here as well. This touches up on the meta announcement I talked about a moment ago, and this is Jevons paradox. This is touching on the fear that as AI is getting more and more efficient, this means less demand for chips down the line. But history usually runs the other way. When something gets cheaper to do, people don't do less of it, they do more of it. And that is basically the story of electricity and computing itself, and I believe AI will follow the same pattern. The businesses that win this era, this AI era, won't be the ones who use AI to shrink and cut costs, they'll be the ones who use it to scale into things that weren't possible before. That's a demand story for chips, not a demand destruction one. So in essence, the winners of the AI era will be the ones who scale. And I could be wrong about this, but I'm not the only one making this bet. The entire industry is making this bet. The hyperscalers are making this bet as well. Now, what is there to do? We will be looking at the sector as a whole. We will be looking at SOX. I believe that one best describes the stocks that we will focus on today. And of course, we will look at the individual stocks as well. So we are looking here at the Philadelphia Semiconductor Index, where we see a quite established uptrend. But wait, this is not just an established uptrend. This is a rising uptrend where the momentum is in fact increasing, where the pattern is strongly suggesting we would be heading towards a phase of a much stronger increase, a phase where the stocks within this index would be expected to potentially extend much beyond what we currently have present. We could notice here a trend that, as I was saying, it is quite established, but it is impressive how well it has been respected so far. And we have 4 touch points throughout an entire decade of this rally. And right now, we are looking at a discrepancy between the actual price and the trend. That's never been seen before in the history of this chart. Does this mean that we are looking at the next decline to reach this trend line once more? Not necessarily, and I believe this not being the case to be probably the more likely outcome unless we see a real major crisis here, and even then, I prefer this trend to continue more directly. And within this structure, I'm looking at this to potentially build a few different interpretations. Yeah, I do see multiple scenarios possible actually, but primarily I would expect this to be the wave 1 up, this the wave 2 down, and for this structure to have just built its wave 3. I'm looking at this trend to continue into a much larger extension, an extension that could span several decades in fact. And within this pattern, I am looking at the wave 3 to have reached the ideal target, which is the 138.2% extension of the wave 1. That has happened perfectly, this being the exact top we have formed for this move. And right now, we are looking at the largest decline since this wave has actually started. Now, what do we expect in terms of the correction? Because clearly this is not minor. We are looking at a decline that's already about a 25% drop, even at this point in time. Well, firstly, we have to strongly expect that the wave 4 is happening. So it extends down to $7,000. So are we really looking at a correction that is expected to just go down and down and down and down? No. Quite the opposite in fact. Because if I am to follow the rule of alternation, which states that if within the correction of the wave 2 we have a sharp decline, here an A, B, C pattern, which tends to work out perfectly as a zigzag correction, we expect in the wave 4 to instead form a sideways correction. And typically, I would still be looking for a 3-wave pattern to develop. But in this case, the wave B does sometimes end up becoming a quite extended one. sometimes even pushing beyond the beginning of the entire decline. So it is possible within this white wave 4 to see an extension even to new all-time highs while still developing this wave 4 correction. Okay, that sounds pretty great. It seems like an opportunity here, and I believe there is. Although waves B tend to be quite difficult to trade. Not impossible, especially if they are in a larger time frame, but the idea stands. Well, one last thing I would consider here is the proportion of it compared to the wave 2. Typically, the correction in the wave 4 will be as large or potentially even slightly larger than the correction in the wave 2. So since at this correction, this wave 2, we are looking at a span of about 9 months, we are looking at this correction in the wave 4 to typically last as long, potentially even longer. But again, this doesn't mean that there isn't opportunity here, as we may form this strong sharp decline that scares everyone off within the wave A. We would also be looking at a potentially quite extended wave B, and this really is an opportunity. But it's also the largest trap that one could fall into, looking for the extension to new all-time highs to form, where it may not. We have seen similar structures in the case of softer stocks, and many have ended up holding the bag for much longer than really desired. Many have ended up looking at the correction form while they've been stuck in the same position for several years. Now, this is the index. This exact same story is not what applies to every one of the stocks that we are tracking today. In fact, we are looking at the opposite. Some of them presenting quite substantial tops being in. Some of them strongly suggesting the uptrend is healthy, and some of them severely lacking the necessary structure to be considered that the uptrend is complete. Some of them will not form the wave B correction we are tracking right now within the index. Some of them will actually see one additional high and a reset of the larger wave 3. So let's get into the actual opportunities here and understand the difference between the various stocks we are tracking. And let's start with Micron here. We are looking at this to have been a wave 1 up, a wave 2 down here, and the wave 3 would have seen this extension. Technically, it would be possible in terms of extensions to consider that the wave 1 was actually this entire structure, but it would be a quite extended one in terms of time frame for it to be a reliable proposal to precede this wave 3. Possible, not really necessary, and realistically has no impact on what we would be tracking within this internal structure. So overall, for Micron, we are looking at probably one of the most established uptrend that could be expected to continue for several decades. In the smaller time frame, as I was saying, I'm looking at this to have been a wave 1 up, a wave 2 down, a wave 3 up, wave 4 down, and this the wave 5 up. The areas of interest for me are the wave 2, the wave 3, and the currently ongoing extension. And I want to be clear, at this point in time for Micron, it is actually not known whether this wave 3 has a top in, as extensions would remain possible from a couple of point of views. I could consider the wave 3 to still be extending where this would have been a 1, 2, 3, 4, and a 5. I could probably still look for this as a wave 5 in a 1, 2, 3, 4, and a 5 to still see further extensions where it simply did not see a top yet. It would have a 1, 2, 3, 4, and a 5. But ultimately, I have to be prepared for a much more substantial correction, a correction that would be this white wave 4 extending between $620 down to $280. I don't necessarily prefer this to be the case for Micron yet. We also see a healthy indication in this uptrend, and that is rising volume with the rising prices. It has not yet seen a decline, and that could be strongly suggesting that the uptrend is not done. The momentum is still high, and honestly, there are paths, especially for Micron, to see much higher levels be reached, to see a much larger extension within this wave 3. I don't necessarily prefer that scenario in terms of probabilities, but it is something to consider. Now, for the correction itself, I wouldn't actually focus on the white area of support yet. I am still looking for this wave 3 to possibly see extensions higher still. And in this case, I would consider this wave 1 would have topped here, the wave 2 would have bottomed here, and we would need one additional high before seeing a top in. Again, it is still possible even for this wave to extend higher directly, but the correction, the decline down, is already quite extended, and it has to be a scenario that is no longer a preference at the very least. So in this case, the levels of support to consider would be starting at $700 instead. Only a slight upgrade and the area of support would have still not been reached. But does it need to be reached before we can see the reversal, before we can see the correction in a wave B? Actually, no. And we can already be actively looking for any signs of a reversal within smaller time frames. But primarily, we have to be prepared for $700 to be reached for Micron before it can see extensions to new all-time highs within a wave 5. Yeah? I'm not talking about a wave A down and an overshoot within a wave B. I'm talking about a wave 5, a 5-wave pattern to the upside, not a 3-wave pattern. But overall, Micron is still looking decent. It's looking acceptably healthy. And we can move on to something that seems to be less so the case. The story for SanDisk, not nearly as pretty. We are looking at a very strong uptrend. It's had probably one of the best years in Wall Street, but the pattern has just broken internal levels of support that would have allowed any kind of internal extensions within this move up. So right now, the only possible assumption to have is that within a larger 5-wave pattern, the wave 3 is complete, and we are looking at the correction, the decline within the wave 4. We already see that in the case of SanDisk, as the prices have risen higher and higher, we have seen a healthy increase in volume for a significant period of time. But as we have gotten closer and closer to the top, closer and closer to the last move, we see a strong divergence, a strong decline in the volume. This is a strong indication that a top was very, very close, and this is a strong indication that a larger correction is necessary before we can see this trend continue. Now, even here, we are not looking necessarily at a correction to take several years, but in fact, if we are to compare this as a potential wave 2, we would see something like a couple of months, yeah, from end of June 2025 to the beginning of August, not even that really. 1 month to complete this correction. And already from the top, we are looking at this period to be very, very close to being achieved. We are looking at the correction to potentially form quite shortly a bottom here. And there is of course a scenario that would allow this as a larger 5-wave pattern to already have a top in. I don't really prefer that, and I actually strongly favor SanDisk seeing one extension higher within this white wave 5 before having the most substantial top yet. Yeah, once that is done, we will have a complete 5-wave pattern, and that will require a much larger wave 2 correction on a much larger degree that could easily lead to much lower prices than we even expect within this white wave 4 correction. So quite shortly, in the case of SanDisk, we are approaching the most important levels of support to track for this stock. We are quite shortly looking to at least form a bottom within, let's say, a wave A, if not a more established bottom within the entire white wave 4, and a rally. A potentially quite strong rally could be seen to form within either a white wave 5 or potentially even a wave B of the larger wave 4 correction. And I would expect even that wave B to show a decent amount of strength. Now, moving on, Intel probably has one of the least complete trends, one of the least complete structures within its rally from the April 2025 lows. Within this structure, we have been looking for a larger wave 3 to emerge, a wave 3 that was expected to reach towards $200. This has not happened yet, and we are looking at a structure that seems rather incomplete, that seems actually also quite capable of much larger extensions. Now, interestingly, in the case of Intel, we are looking at this to potentially still be a wave 3, and as it managed to still hold quite high levels of support, I believe Intel could form a bottom anytime now. I believe Intel could be looking for the reversal to happen rather shortly. And in the case of this structure, I'm looking at a wave 4 correction that has taken as long as the wave 2 correction has, actually a tiny bit longer. I am looking at a wave 4 correction that has reached the 38.2% retracement, the ideal target for the wave 4. I'm looking at a structure that clearly allows this to be a complete wave C to the downside, where sure, within this as a wave 5, it may see slightly lower prices, and I will certainly be watching here the $81 region. We see some structural support there, but the main idea is that the pattern could be complete, and it is showing strong signs of having a complete count within this decline. Then another very strong contender here is ARM. ARM is a bit of a newer player. It has only been in the public markets for less than 3 years, but we are still looking at a quite healthy uptrend. We are still looking at this to be a wave 1 up, a wave 2 down here. If you remember, we've been tracking very closely this correction, and it was very clear when we could have expected a bottom to form. It actually formed a very beautiful zigzag correction. And now we are looking at the wave 3 to form a potential top within a much larger wave 3. But this wave 3, I actually believe, would not be over yet. I believe we would still be looking at this to have been the wave 1. A wave 2 correction would have formed internally here. Then this wave 3 top here, the wave 4 currently in formation, and we would be looking for one additional high before forming a top within the larger cycle. ARM is another one of these stocks that actually strongly suggests it requires one additional high, one additional 5-wave pattern to complete its larger uptrend, to complete this as a larger wave 3. The risk? It would imply a top would already be in within the larger wave 3, and we would be required to track a larger wave 4 correction, but even then, we could expect a decently sized wave B within this larger wave 4, as we are looking for more of a sideways correction as opposed to a sharp correction as we've had within this larger wave 2. But again, I strongly prefer that this stock will see a more direct rise, a more direct continuation higher, and that the wave 3 doesn't yet have a top in. So the levels of support I can track are actually a couple. We could be looking for the wave 1 to have topped here, in which case the wave 3 would have topped here, and support levels would be extending down to $225. But it is possible for me to consider the wave 1 would have topped here, this would have been the wave 2, in which case the wave 3 could have rather topped here, allowing the area of support to slide a bit lower, pushing down to $218, $219 instead. Now, to be honest, I wouldn't be surprised of even a dip into structural support we have formed around the $200 level here right before this strong rally up. That is a consideration to make, but as I'm looking at the internal developments of this structure, I believe it is quite close to a bottom, where right now we are looking at 5 waves within the wave C, and as it is developing an ending diagonal, I believe a bottom could form quite shortly. Then moving on to AMD. It shows a rather difficult pattern on the larger time frame, where this would have been a wave 1 up, this a wave 2 down, and now we are looking at a wave 3 to develop. A wave 4 would be expected to follow, but we cannot know yet that the wave 3 has a top in. To be honest, the pattern is actually quite complete. I do see it possible that this wave 4 would have already started, but I do see the possibility to consider one additional 1-2 in this area, as opposed to considering the wave 2 to have bottomed here, in which case it would be quite difficult to look for even further highs. I would be tracking a very similar area of support anyway. I would be watching the $450 level. Yeah, it does line with structural support we've had in this region. It did provide some relief yesterday, but it extends down to $335. So an extension within this as a wave 4 could become quite large, and unfortunately we are dealing with a slightly more complicated pattern on the large time frame, but overall, from the peak, we are still looking for a three-wave pattern to develop. We are still looking for a correction to potentially form a bottom rather soon. And as within this structure, I could even consider to have three waves down. One additional low could be enough to fully completing a correction within an extension of this large wave tree. So let's sum it up here. Micron is looking at a quite complete pattern, could allow one additional high. Volume, however, is still pushing higher. Volume is still rising within the uptrend, so it is rather likely that we will see that additional high at this point in time. That is what is being suggested, not a guarantee, however. Then SanDisk, it is quite established that the wave 3 could have topped in the best case scenario. It is possible that it will see a fourth and a fifth already in place within the other interpretation, where a wave 2, where the wave 1 top would already be in, and the wave 2 would be expected, which could lead to an even more severe decline. And already we are looking at a correction that could go as low as $300, but I don't really prefer that scenario too much, to be honest. Then Intel probably has one of the more complete corrections, but that is also since it didn't rally in the last move up for the other players. It rather formed a wave B correction, and right now we could consider Intel to be maybe a bit safer, yeah? It still hasn't reached $200, and I would still like it to. Yeah, the pattern seems rather incomplete to me. ARM is facing another one of the less complete structures up. It's another one that I would probably prefer to see extend higher. So right now, yes, I still favor the wave 3 to push higher. I would still favor a larger correction to not happen as of yet. But really, we can only trust this as long as we do not see a sustained break below $218. If that happens, the risk of a potentially even larger decline will happen, and it doesn't have the same established uptrend as some of the other stocks do. Don't get me wrong, even for the others it would be quite disastrous to not hold internal levels of support, but especially for ARM, we might need to lean into quite unfavorable patterns. Then AMD, probably one of the more complete waves 3 up, but at the same time, it's not out of the race yet. It is still capable to extend, but it might require smaller timeframe confirmation compared to some of the other opportunities here. Overall, it is still in play. I still believe it's capable. I would still be looking at this stock with interest if given enough of a determination from a smaller timeframe perspective. So what do we draw here? Buy the dip, still valid, but you have to understand the position we are in right now. The correction that could take 1 year, 2 years, maybe even more than that, might have already started, and you may be able to benefit even from a relief rally within a wave B. But do not get caught holding the bag as we head into this possibly multi-year correction. And for now we will stop here. The video is already probably a bit too long for YouTube. I would appreciate your feedback if you'd like to let me know how you like the pace of these videos, how you would like them to be different. Maybe you'd like a short explanation. Maybe you would have liked to focus only on 2 or 3 opportunities instead. But for now, this is about it. These are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to leave a like, subscribe, and if you enjoyed the content and want to support it directly, check out the channel membership, and I'll see you in the next one. Bye bye.